Hey guys, how's it going? It's Andy from Magoo Investing. Happy Friday. Today I want to talk about my favorite stock of 2021 with General Electric stock ticker symbol GE, because we're getting pretty close to a very important day for the stock, and I wanted to discuss why I'm not happy with GE overall. And so in today's video, we're going to be talking about what's going to happen at the beginning of May, talk about how this changes my viewpoint on GE going forward, and then I'm going to talk about some of the changes that we've been seeing in the overall market that has made me kind of have to rethink the way that my investing strategy is going moving forward, because for 2020 we saw a lot of volatility, and one of the ways that you can take advantage with high volatility is by selling options. And if you've been paying attention to option prices or the VIX, which is my favorite way to determine how volatile the stock market is overall, you'll know that things are pretty low right now. And so I can talk about some of the changes that I've seen there and how it's made me a more passive investor. So before we get started, I got to say, not financial advice, and anything you hear in this video is just my own opinion. So let's hop right into it, because as of right now, GE is my largest position in my overall portfolio. When I look at it, it makes up around 19% of my portfolio. So kind of the way that I look at my portfolio is I want to have like 8 to 12 different positions. And so GE at this point is definitely my largest position. And it's very interesting because in the past week, I've always thought of GE as being a stock that's going to follow the direction of the overall market, but just maybe not move as aggressively as the overall market. But a couple times this week, while the market has been down, GE has actually gone against the flow of the overall market and been actually up. And so that's been very interesting to see. But as of right now, I do have the ability to sell 2 covered calls in my position. The idea is that for a stock that you think is going to be maybe horizontal or go down, there's a way to bring in extra cash, and you can use this to buy additional shares, just hold on to it in cash, or buy whatever stock you want. The problem is, right now, the volatility is very low. For pretty much all of 2020 and pretty much until recently, the VIX was up above 20, and that is much higher than its historical range. And that means that the options prices are going to be much higher because people expect that the market is going to be moving more than normal. And so when you have that expected move higher, that means the option prices are going to be higher. And for someone like myself that loves selling options, this brings in higher premium. Now we've gotten to the point where things have kind of toned down for a while. Yesterday, we did have a big spike up in the VIX, up around, I think it was like 8%, because Biden came out and talked about how he's going to be raising the corporate tax rate and the higher levels of the tax bracket. And so this made a kind of violent move. I think it was like a 1% drop when Biden announced that. But now today, the VIX has fallen down 8%. So basically what this means is this was an unexpected move in the overall stock market, and that resulted in the VIX shooting up. And now we're getting to the point where we have to talk about the GE reverse stock split. And so this was something that I've been pretty vocal about, and was one of the reasons why the stock fell. I think it was like a month and a half ago when they came out with their investor day. Basically, the idea is that GE wants to be in line with some of the other stocks that have similar market caps. When you look at GE, there's kind of a view that it's a very cheap stock, because when you look at it, it's trading for like $13.50. And when you look at some of the other stocks that have similar market caps, the only one I can really remember right now that they mentioned was Lowe's. I think it's trading around like $80 to $100. And so while it's not very important to have the price of the stock be artificially inflated, there are some positives when you look at it from an investing standpoint. But one of the negatives to artificially raising up the stock price by removing a lot of the outstanding shares and by multiplying the stock price by 8, it means that these smaller investors like myself are not going to be able to sell options. And so it's a mix of the stock market volatility being historically low for the past year and the stock split that's coming out that's made me less likely to actually sell options at this point. So as of right now, I have only one option position open, and this is probably the fewest amount of options that I've had open for probably about a year at this point. I still have my Leap that I sold. No, I bought it. The Leap that I bought for January of 2022, and that's going to allow me to benefit if the stock price rapidly increases over time. But now we're getting to the point where the stock price for GE is going to be up, let's see, $13 times 8, let's use my college education, that would be $104. And so to be able to sell a cash secured put, that's going to cost 10 grand. I don't want to put 10 grand into GE at this point. The largest position that I've had so far is, I think at the beginning of the stock market crash, I think I had like 50% in Delta stock. That ended up working out pretty well for me, but having that high of a percentage of your portfolio going into one position, especially a volatile stock like an airline back in 2020, maybe not the best idea. And so we're getting to the point where GE is no longer going to be able to position that I can used a wheel strategy on. And so this is going to force me to kind of change the way that I've been viewing the overall stock market. The reason that I love the wheel strategy is it allows me to use stocks that I absolutely love and I wouldn't mind holding 100 shares of, and allows me to bring an additional premium, especially if the stock market goes relatively flat. And if you've been paying attention, as of right now, the market's been pretty flat for the past month at this point. And so selling options is a great way to take advantage of that horizontal movement. But when I look at my overall portfolio, I don't think I'm going to be able to sell any covered calls or any cash secured puts on any of my positions. I am nowhere near owning 100 shares of pretty much any company. The highest amount of shares that I have is I have 25 shares of Southwest Airlines, which is 11% of my portfolio. So I need to increase that position by 4 times to be able to have enough shares to actually buy into that stock. Actually, I need to multiply by 3, but to get the 100 shares. But at this point, my options potential is pretty low, because when I look at the overall stock market, the reason I love GE is it allowed me to use a wheel strategy because it's relatively cheap. When I started using the strategy, I believe it was down around $9. And so the stock price has increased rapidly during that time and I've made a lot of money. But now that the stock split is going to happen, I'm not going to have a lot of options. The only other stock that I would consider using the wheel strategy with right now is Zynga, ticker symbol ZNGA. This is a stock that I've loved in the past, and it's always been one of these stocks that I mistakenly have 5 shares of it, which is $50. And every time I do my portfolio breakdown video, I see that. I'm like, I should really raise it up to 100 or sell it and then sell a cash secured put, but I always forget to do that. So maybe now that GE is no longer going to be in my price range to sell options, I'll be using Zynga for the wheel strategy. But up until this point, GE has been my number one stock to use a wheel strategy on. And yes, there is the potential that maybe the stock split doesn't go through, but if you've ever paid attention to politics, the incumbent pretty much always wins, because this is a name recognition that people kind of understand, and people vote along the party lines. And what's the party line? Unlike having 2 major political parties like you do in the US political system, you have the recommendation of the board when it comes to the vote for the shareholders meeting, and they advocated for the stock split. And so going against that, I'm going to give it a 0.5% chance that the stock split doesn't go through, because I think most people, myself included, when I look through the different things that you can vote on for the shareholders meeting, I just kind of browse it and kind of vote along the party lines, as I call it. Since I've been talking about politics, party lines kind of make sense. And this was the first time that I voted against what the board has recommended. And I think most people probably vote the similar way that I do. It takes more effort to kind of understand why you would vote against the board that you're trusting to run this company that you've put your hard-earned money into. So in this situation, I'm going to give it a 0.5% chance that the stock split doesn't go through. And it's going to be very interesting. I have not done enough research to kind of understand what's going to happen in my LEAP that I bought for January of 2022, considering I bought it for a stock that was $10 at the time, and now it's going to be a $100 stock. So let me know if you've ever had an options position like that. I'm not too worried about it. I'm sure TD Ameritrade is going to let me know at the beginning of May when the stock split potentially goes through. But it's been very interesting looking at my overall portfolio right now that the highest performer for today and pretty much this week has been GE, being up 1.5% at the time of recording this. Apple sitting around 1.5%, and then Adobe is up 1.25%. And so GE has been going against kind of the market, which has been very interesting to see, because as I mentioned, GE usually follows the market. Past couple days, that has not been the case. So we're going to be going into earnings season pretty soon. We've had some very interesting ones. We had Netflix came out with some underwhelming reports, and that could push the stock market down. And I'm going to make a video talking about the past 3 stock market crashes and the catalysts that have made the market fall significantly, because at this point, I think pretty much everyone would agree that the stock market is extremely overextended, and people are starting to get a little bit worried. You can see that take effect yesterday with the VIX spike after Biden came out with that unexpected news about the corporate tax rate. And until we get some sort of catalyst, the stock market's not going to fall. And so I'm going to go back, do some research, and kind of see what has caused the past 3 stock market crashes. Some of them are pretty easy, like the pandemic crash. It's kind of in the name. But the other 2, maybe people don't know as much about. That's going to be the financial crisis and the dot-com bubble burst in. And I have a general understanding of what happened, but I think I'm going to make a full video talking about it. Also, I want to make a video talking about ranking the NBA teams based off of their jersey sponsor and the stock price. It's an idea that I've had for a long time, and I just kind of want to make that video eventually. So I'm still in the job search, so I'm probably going to be making more videos than I will this upcoming summer. Hopefully you guys have had a fantastic time in the overall stock market. Hopefully you guys have had some very nice weather up in the Portland area. It's been absolutely beautiful. Thanks for watching. I appreciate all the support as always, and I will see you in the next video.